Welcome to Explain the Charts, your go-to source for in-depth market analysis. Today, August 8th, 2025, we're putting the spotlight on USDCHF, a pair currently caught in a tug-of-war between fundamental shifts and technical patterns. Recent headlines from a quick Google search paint a clear picture. The US dollar is struggling as more Federal Reserve officials signal a willingness to lower interest rates. Minneapolis Fed Bank President Neel Kashkari explicitly warned that the real underlying economy is slowing, leading him to suggest it may become appropriate to start adjusting the federal funds rate. This dovish sentiment, with Governors Bowman and Waller reportedly preferring a rate cut in July, is creating significant headwinds for the greenback. Concurrently, the Swiss franc appears to be steady, even as markets monitor U.S. tariff deadlines. The USDCHF exchange rate recently moved above 0.8100 briefly, but is currently hovering around 0.8062, showing a slight increase in the last 24 hours according to recent reports. This initial overview sets the stage for what we see on the daily chart. Looking at the broader picture on our daily chart, the USDCHF has seen a significant bearish trend since the highs around 0.92 in early May 2024. We can clearly identify a downtrend channel characterized by lower highs and lower lows over the past few months. A critical event was the sharp decline on April 10, 2025, where the pair plummeted from around 0.855 to 0.820, marking a substantial bearish impulse. This move broke through several previous support levels, establishing a new lower range for the pair. The June high of 0.8250, mentioned in our news summary, now stands as a crucial long-term resistance level. On the support side, we see strong buying interest near the 0.787 to 0.791 zone, which aligns with the July low of 0.7872 discussed in our news. Now let's narrow in on the recent price action, specifically from late July through early August. After hitting a low around 0.792 at the end of June, the pair has attempted a rebound, pushing back above the important 0.80 level. The current price of 0.8056, as of the August 7th close, shows it trading above the former support zone around the April low of 0.8040. This is a positive sign for short-term bullish sentiment, suggesting a potential shift from a pure bearish stance. However, the 50-day simple moving average, positioned at 0.8066 according to our research, is still acting as a dynamic resistance, with the price needing to confidently break above it. A sustained close above 0.8066 could signal that the pair is no longer tracking its negative slope, opening the door for further upside. Transitioning to the 15-minute chart, we gain a granular view of the immediate intraday movements. We can observe significant volatility, with sharp moves both up and down, indicating active trading around these key levels. In the last 12 hours of trading on August 7th, the pair saw a dip towards 0.8045 before a gradual recovery, currently consolidating around 0.8056 to 0.8060. This short-term consolidation suggests traders are digesting the Fed news and positioning themselves. Immediate resistance on this time frame appears around 0.8065 to 0.8070, which aligns closely with the 50-day SMA on the daily chart, making it a critical short-term hurdle. On the downside, immediate support can be found near 0.8050, and below that, the 0.8040 level, which was identified as the April low and previous support on the daily. So, where does this leave us for USDCHF in the short and long term? Reasons to be bearish. The primary driver for bearish sentiment remains the Federal Reserve's increasing inclination towards interest rate cuts, which fundamentally weakens the US dollar. The long-term downtrend visible on the daily chart from early 2024 highs suggests that bears are still in control until proven otherwise. A failure to hold above the monthly low of 0.8027 would strongly reinforce bearish pressure, potentially pushing the pair towards the July low of 0.7872, or even the 0.7910 support zone mentioned in technical outlooks. Reasons to be bullish. Despite the fundamental headwinds, the pair has successfully defended the rebound from the monthly low of 0.8027. A sustained break and close above the 50-day SMA at 0.8066 would be a strong technical bullish signal, indicating a potential trend change. If this happens, the pair could attempt to test the significant June high resistance at 0.8250 in the medium term, a move that would represent a substantial reversal. For short-term trades, a decisive break above 0.8066 could offer entry for a long position, targeting 0.8080 and then 0.8100. Conversely, a rejection from 0.8066 or a break below 0.8040 would present a shorting opportunity, with targets at 0.8027 and then 0.7950. To recap the important price levels to watch for USDCHF. Resistance is clearly defined at 0.8066, the 50-day SMA, and a stronger level at the June high of 0.8250. On the support side, keep a close eye on 0.8040, April low, 0.8027, monthly low, and the critical 0.7872, July low, support zone. Our unbiased prediction suggests that while the long-term trend remains bearish due to Fed policy, with a likely 70% probability for further downside if 0.8027 breaks. However, a short-term rebound is highly probable if 0.8066 is convincingly breached, with a 55% probability for a test of 0.81 to 0.815. Conditions that would reinforce further downside include weaker-than-expected U.S. economic data or more aggressive dovish statements from Fed officials. Conversely, any hawkish shift from the Fed or stronger U.S. economic indicators could fuel a significant bullish reversal. Always look for confirmation on higher timeframes for trend changes and manage your risk diligently. Don't forget to consider upcoming economic releases for both the U.S. and Switzerland, as these can drastically impact currency pairs. That's all for today's in-depth analysis of USDCHF on Explain the Charts. Be sure to like, comment, and subscribe for more market insights.